We detected an unusual trade on Electronic Arts stock, ticker symbol EA. And what's also very unusual about this is that Electronic Arts reports earnings in a few days on February 4th. And so in this video, we will analyze this unusual option activity to find out if this wealthy investor is bullish and buying Electronic Arts before earnings or bearish and selling. Because as we all know, the rich have more access to information, including leaked insider information, such as earnings reports, to make better financial decisions. No wonder the rich get richer. And so to level the playing field, let's dive into the analysis of unusual option activity to find out how they are trading Electronic Arts. As we can see here on the options time and sales tape, these February 7th options were all being traded at about the same time. The 135 strike calls and the 130 strike calls. And we can get an estimate of the price that they paid for each of these trades, where they paid 130 for the 130 strike calls and they sold for 40 at the 135 strike calls. And so when we calculate this out, we get $90 per trade. And so how many contracts in total were they trading? Well, if we take a deeper look at the option chain, we can see the total number of contracts at the volume for these February 7th options. As we can see here, there was at least 10,000 contracts for these 130 strike calls and the 135 strike calls. And both of these unusual options were new opening trades, since the open interest is much less, as we can see here. And so if we estimate the total trade cost of 90 times 10,000 contracts, we can see that this was at least $900,000. But keep in mind, earnings is coming up in a few days, so this is a higher risk trade in comparison to the trades that we share on our website. And so if you want lower risk, higher chance of profit trades, then make sure to go to our website.
Visit www.unusualoption.com to join our membership and start your journey to a financial success with a partner you can trust.
We will put a link to our website at the top here, where you can also learn trading strategies that further reduces risk while increasing profits. Because keep in mind, not all of these unusual trades will be profitable. Some will be a loss. But as long as we diversify with higher quality stock picks based on stronger data analysis, then we can become more profitable in the long term. Now, with that said, we still traded this, but we use position sizing to manage our risk. You can see here our position. POS stands for position, green means buy, and red means sell. And so we also bought these 130 strike calls and we sold the 135 strike calls. We were able to get these for cheaper since the price did go down lower ever since those unusual options were being traded. And so when we analyze this trade, you can see that each of these trades costs $75 of debit, and max profit on the blue line here, which shows up over here, is $425 per trade, which means our risk to reward ratio of 425 divided by the risk of 75, which is the cost of the trade, is a 5.66 ratio, which means we could potentially make 566% profit on this trade. And so this is a very favorable risk to reward ratio where we don't need to put a lot of capital into this trade to be able to make a lot. And so that's one of our strategies that we deploy when we trade the unusual option activity. And we can see here that this is clearly a long bullish trade because the x-axis here, which represents the share price of the stock currently trading over here, and the y-axis, which represents the profit loss. Note the zero break-even line. And so as the share price goes down, it becomes more negative. If it goes up, it becomes more positive profitable. Because this is a long bullish trade, and we can confirm it here on the Greeks. We have a positive delta trade. But be aware of the high risk on this trade. We have a very negative theta. These options will expire on February 7th in just a week. And so they will lose value. And that is why the purple line, which represents the current date, drops down to the max loss at expiration, If it does not break above this by expiration, this is the break even here where it meets the zero break even point. And so you can see that this break even is about $130.75. And so be aware of the risk with trading this for earnings. It is very high risk, and that is why we use position sizing to manage our risk. We don't put a lot of capital into these higher risk earnings trades because we put most of our capital in the lower risk, higher probability of profit trades that do not have earnings coming up. And so if you want access to those, make sure to go to our website. We'll put a link at the top here where you can find out what the wealthy investors are trading and our trading strategies that further reduce risk while increasing the chance of profit. Let us know in the comments below. Do you think Electronic Arts will rally after earnings, or do you think it will crash down? As usual, please hit the like button, subscribe if you haven't, take care, and have a wonderful day.